Did you know that a single under-the-radar company is quietly attempting to corner 5% of the entire global Ethereum supply? I'm talking about a firm that most retail investors have never even heard of, yet it's sitting on a treasury so large it could reshape how this entire sector is valued. Welcome back, everyone. If you watched my video from July 25th, you'll remember I told you about a hidden catalyst building inside BitMine Immersion Technologies, ticker symbol BMNR. I broke down how this company was hoarding Ethereum at a staggering, almost unbelievable pace. Well, over the past week, the market action has spectacularly validated exactly what we talked about, and today we are tearing into the freshly updated data. Here's the thing, though. Before you even think about hitting that buy button on BMNR, there is a crucial update you absolutely need to see first, because the numbers changed in ways almost nobody predicted. I'm going to show you why a massive treasury of $11.8 billion is completely rewriting the valuation story of this stock. And you are going to want to stick around all the way to the end, because while the growth numbers look absolutely incredible on the surface, there is one hidden metric we'll uncover in just a moment that changes everything about how you should trade this. Miss it, and you could be walking into a trap. Real quick, if you get value out of this deep dive, do me a small favor and smash that like button and subscribe. It genuinely helps the channel more than you know, and it keeps these detailed breakdowns coming. All right, let's get into it. But before we get to that hidden metric, let's rewind and look at exactly how my previous predictions played out, because the accuracy here is almost spooky. In my last video, I mapped out a very specific, very tight trading channel, and I warned you about a heavy options resistance ceiling sitting right near $17.50. So what actually happened? Right on cue, on July 27th, the stock gapped up over 10 to 13%, pushing straight into that exact $17.80 to $18 zone before slamming face first into massive intraday friction. And then, just like clockwork, it pulled back perfectly into the $16.50 to $17 range. It executed the exact price behavior we forecasted, almost to the penny. We nailed the technicals. We knew precisely where the sellers were lying in wait, and we knew exactly where the buyers would step in to defend the floor. But here's the truth that most channels won't tell you. Technicals only reveal what retail traders are doing on the surface. The real story is always hidden underneath, in the actual filings. So if we dig deeper into those SEC documents, we start to see what the big players, the institutional giants, were quietly up to the entire time. And what did we find? I told you last time that so-called smart money was quietly stacking shares behind the scenes, accumulating while everyone else was distracted. And just days after that video dropped, the SEC filings confirmed every single word of it. Weiss Asset Management boosted its stake by a jaw-dropping 363.6%, adding 3.39 million shares to their vault. Let that sink in for a second. Dimension Capital increased its position by 28.3%. And perhaps most telling of all, we even saw the California Public Employees Retirement System, better known as CalPERS, one of the largest pension funds on the entire planet, reveal a brand new $14,070,000 position. Ask yourself this: why would a conservative government pension fund suddenly want exposure to a crypto treasury stock? These institutional titans are not day trading for a quick flip. They are quietly positioning themselves for a massive structural shift that most people haven't even noticed yet. And the reason they are buying in so heavily becomes absolutely crystal clear the moment you look at the sheer mind-bending scale of the assets BitMine just locked up. My boldest claim last time, the one that had some people in the comments calling me crazy, was that BMNR was secretly trying to corner 5% of the global Ethereum supply. Well, this week, recent company disclosures made it official. They now hold a staggering 5.79 million ETH. To put that into perspective, that brings them to exactly 4.8% of the total circulating supply of the world's second-largest cryptocurrency. Think about that. They are 96% of the way to their ultimate goal. They are no longer just a crypto mining company. They have completely transformed themselves into an institutionally backed digital asset trust, something entirely different from where they started. So the natural question becomes, what is all of this actually worth to you, sitting at home as an investor? Let's break down the math, because this is where it gets genuinely exciting. Here is the single most important fundamental concept you must understand about BMNR right now. Despite holding a total crypto and cash treasury worth $11.8 billion, the stock's market capitalization is still sitting below its net asset value, or NAV. Now, what does that actually mean in plain English? It means that investors buying this stock today are mathematically acquiring exposure to Ethereum at a 5 to 11% gross discount to spot prices. Read that again. you are essentially buying a full dollar's worth of Ethereum for roughly 90 cents. It's a fundamental mispricing, an inefficiency in the market, and the smart institutions are exploiting it aggressively while the window is still open. But hold on, because none of this excitement matters one bit if we don't stop and honestly examine the risks. And there is a serious financial hurdle this company has to jump over. In the last video, I warned you very specifically about something I called the preferred dividend intercept. It's a hidden trap that could sink a lesser company. Here's the problem. BMNR raised a mountain of capital using 9.5% Series A preferred stock, and that creates roughly $40 million in annual obligations. That is a massive, relentless cash burn risk. Because think about it, if a company is just sitting on digital gold locked away in a vault, that gold isn't generating any cash to pay that $40 million annual bill. Normally, that means they would be forced to either sell off their precious Ethereum or dilute their shareholders into oblivion just to survive. It's the kind of thing that quietly destroys companies. But, and this is a huge but, that is only half the story, because BitMine just activated a genuinely brilliant solution to solve this exact problem. They evolved almost overnight from a passive holding company into a massive, humming yield-generating engine. BitMine didn't just lock up its Ethereum and walk away. Instead, it has staked over 4.9 million ETS, which is roughly 85% of its entire portfolio, through its Maven platform. And here's the payoff. This staking operation alone is projected to generate somewhere between $247 million and $299 million in annualized revenue. This is pure, recurring, dependable cash flow. It completely and utterly covers that $40 million annual preferred stock obligation, totally intercepting and neutralizing the cash burn risk we were all so worried about. Crisis averted, and then some. Yet, even with all that beautiful cash flow now secured, there was still one ghost from the past haunting this stock. One lingering fear that kept some investors on the sidelines. That is, until management did something almost nobody saw coming. The one major deviation from my original thesis, and honestly, it's the best possible news for the bulls, revolves entirely around dilution. Historically, and I want to be transparent here, BMNR funded its explosive growth through a truly horrific 9,000% dilution spiral. That kind of dilution is usually a death sentence for shareholders. But this week, management abruptly flipped the entire script. Instead of diluting shareholders even further into the ground, BitMine actively slowed down its Ethereum purchases. And why on earth would they do that? To redirect that cash into an aggressive $4 billion stock buyback program. This single decision changes the entire mathematical trajectory of the company. And when a company sitting on this kind of extreme liquidity suddenly starts devouring its own shares, we tend to get a very specific, very violent market reaction. So let's look at the sheer scale of this pivot, because the numbers are wild. The company repurchased 6.1 million shares in the past week alone, just 1 week. That brings their total July retirements to a whopping 11.6 million shares. This is not some token feel-good buyback designed for a press release. This is a strategic operation that is actively, aggressively shrinking the float. In fact, get this. This share retirement was responsible for up to 88% of the weekly increase in the stock's Ether per share value. They are, quite literally, mathematically forcing your slice of the pie to grow larger with every single day that passes. And this rapidly shrinking float brings us directly to what might be the most explosive catalyst on the entire horizon. Now, I want to be clear and honest with you here, because I debunked the myth of a traditional short squeeze last time. I noted that the stock's extreme daily liquidity actually neutralizes typical short squeeze risks, so don't go chasing that particular ghost. However, what we have brewing now is something arguably far more powerful, a massive buyback squeeze. By executing the single largest common stock buyback in the entire history of digital asset treasuries, BitMine is aggressively suffocating the available supply of shares. Now take that rapidly shrinking supply and combine it with forced passive buying, the kind that gets triggered automatically by the stock's recent inclusion in the Russell 1000 and Russell 3000 indexes. What do you get? You get a structural supply and demand imbalance that could forcefully catapult this stock higher during the very next Ethereum rally. So let me ask you this. What happens when unstoppable passive buying meets a rapidly vanishing supply of shares? History suggests the answer is fireworks. So how do you actually trade this setup in the immediate short term? Let's get tactical and look at the technicals. For the short-term traders watching right now, you need to understand that BMNR is a high beta, volatility-driven momentum play. This is not a sleepy blue-chip stock. It's bouncing around in a very well-defined channel. We've got hard support holding strong down at the $15.50 to $16.50 level, and heavy overhead resistance sitting near $18. The name of the game here is executing range-bound swing trades. The playbook is simple in theory, buying the dips near the 50-day moving average of $16.59 and then ruthlessly taking your profits as it approaches that $18 to $18.31 upper Bollinger Band resistance. But listen closely, because this stock routinely moves over a full dollar intraday, so strict discipline and tight stop losses are not optional. They are absolutely required if you want to survive. While the day traders are down in the trenches fighting over pennies in that channel, Wall Street's top analysts are staring at a much, much bigger prize. And frankly, Wall Street is incredibly constructive on this name right now. The average analyst price target currently sits at $27.65, backed by a moderate buy consensus. Do that math with me. That implies a massive 55% upside potential from its current trading levels near $17.80. And it gets better. We even have Cantor Fitzgerald maintaining an overweight rating, recently setting an aggressive high watermark target of $30.30. And even the more conservative voices in the room, like B. Riley Financial, are holding a buy rating with a $25 target. The message from the street is loud and clear. They know deep down that this naive discount simply won't last forever. But getting to those $30 targets requires the underlying asset itself to perform. And that brings us to the macroeconomic triggers that could light the fuse. BitMine's chairman, the well-known Tom Lee, recently highlighted a massive macroeconomic catalyst that has a lot of people buzzing. The ETH to BTC ratio recently climbed to a 3-month high. Now, historically, this specific signal serves as an incredibly strong bullish indicator for Ethereum outperformance against Bitcoin. Lee is personally targeting the $2,000 and $2,500 levels as the next major technical milestones for ETH. And here's the kicker you need to grasp. If Ethereum scales up to those targets, BMNR's net asset value doesn't just grow in a nice, gentle, straight line. It scales exponentially, and that beautiful discount window we talked about would slam shut almost instantly. So imagine for a moment that Ethereum truly rips to those levels. Where does a discounted, share-shrinking, cash-flowing treasury company go from there? So let's pull all of this together. The institutional movement, the buyback machine, the staking cash flow, and the macro momentum. What is the final verdict? For the long-term investors out there, the risk-to-reward ratio on this one is deeply, genuinely compelling. As I concluded in my last analysis, the ultimate survival floor for BMNR is dictated entirely by spot Ethereum staying comfortably above the $1,200 to $1,400 range. And with Ethereum currently trading up near $1,900, the company's balance sheet is highly secure and well-cushioned. Your downside risk is genuinely protected by the sheer, recurring cash flow of their staking operations. And that hands you a massive margin of safety that most speculative plays simply cannot offer. And that brings us to the ultimate payoff for those with the patience and conviction to hold the line. Now, before I give you my final verdict, I need to pause for a very important word. I am not a licensed financial advisor, and absolutely nothing in this video should ever be taken as formal financial or investment advice. Everything I've shared today is for educational and informational purposes only. The stock market carries real risk, and you can lose money, so please, always do your own thorough research and consider consulting a qualified professional before making any investment decision with your hard-earned money. Okay, with that firmly out of the way, let's wrap this up. My honest final take is that BMNR represents one of the most fascinating asymmetric setups in the entire market today. For those who genuinely believe in the long-term future of Ethereum, you have a rare, almost unusual opportunity to accumulate shares at a real discount to net asset value. And the best part, you can essentially sit back and let the company's aggressive $4 billion share buyback program do the heavy lifting for you. Every single day they retire more shares, they are mathematically increasing your personal ownership percentage of that enormous $11.8 billion treasury. It really is a compelling story. So now I want to hear from you. Here's my question for the comments section. If BitMine successfully corners its full 5% of the global Ethereum supply, do you think regulators will eventually step in and try to stop them, or will Wall Street simply pile in and celebrate it? Drop your honest prediction down below, because I read every single one and I'd love to hear your take. If this breakdown helped you understand the story better, please hit that like button, subscribe for more deep dive financial analysis just like this, and turn on notifications so you never miss the next update. Thank you so much for watching, and